Today, we are going to talk about common size reporting and what that actually means. This is really helpful to look at your financials, not just on a dollar amount, but also looking at it on a percentage wise. There are a lot of people, small and mid sized companies, that it is easier to understand what's actually happening within your business if you can compare it from time to time and can put everything on that common size amount. So, we're going to cover three different things. What actually does common size reporting mean? We're going to see how it actually matters to you as business owners, and then how it can affect creating better financial decisions, helping with maybe tax planning, and really just spotting trends before they actually happen. All right, let's get into it. Okay. So what is common size reporting? So what this is taking your financial statements, and it's most of the time going to be your profit and loss or your balance sheet, and instead of looking at everything on a dollar value, we're going to convert everything over to a percentage. And in order to do this, we're going to create a baseline. And so on your income statement, this is going to be through your revenue. So everything is going to be divided by your total revenue. And on your balance sheet, this is going to be typically your total assets. So then what you can do is see everything on a more common denominator of what's happening. So instead of saying that payroll is 300,000 for the month, what you can do is say, well, payroll is 30% of revenue. So it really helps give more context to that number and helps you dive in to see what's actually happening. Because just saying $300,000 as an expense, maybe that's really high for you, maybe that's really low. We don't really understand it though, unless we are seeing it on compared to revenue and seeing how it can make sense for your business model. All right. So when we use the benefit of creating everything on a percentage side, so that common size reporting, it's just a lot easier to compare things. So we can look at things more on a month to month basis, year to year basis, or we can even look at things more on a department or location or some other value in which you can easily compare what is this one doing compared to this one. So, for example, if revenue is going up, typically your expenses go up, and that's not necessarily a bad thing. But when we look at it and say that revenue went up 10%, and perhaps we can see that the expenses went up 35%, now we have more of context in what's going on, and it's something that we can dive deeper into and really understand why is that trend happening. So it's not just about did we make more money, but actually becoming more efficient. Are we becoming more efficient and profitable over time and as we grow? Common size reporting can also be really useful for tax planning because we can spot trends before well, not before they happen, but we can spot trends and make decisions before the end of the year as we're reviewing things. So we can see that if we're increasing and our profit margins are shrinking, we can kind of navigate and see, well, what do we need to do? If we're making more of a profit, then we can see, okay, what tax planning options do we have and what can we implement before the end of the year? And then if your costs are creeping up, what we can actually look at is, are these necessary? Are these all properly recorded? And do we have documentation for everything? So it's really just overviewing and understanding that it's easier to have each percentage and be able to evaluate things more on a percentage versus just on that dollar figure. All right. So what does this all tell? Basically, common size reporting is really going to help you with reading your financials on a comparison size, and it's really going to help you understand, not just what changed, but why it has changed. And when you're growing your business, it's really important to break things down so that you can improve your decision making. If I hope this was helpful for you, and I hope that you can take this back to your own finances, perhaps play around and choose some different months and different years and create um, that common size reporting and really compare and see what's happening. And if you are struggling with kind of understanding, okay, well, I'm seeing that this is a percentage, but I still don't know what it means, we are happy to help you with that. So please reach out to us. Our information is here on the screen. And yeah, I really enjoyed chatting with you, and I hope to see you next week. Thanks, guys.